Pakistan amid months of long financial crunch. Pakistan's currency plummeted to a record low. The Pakistani rupee was valued at 255.43 against the US dollar in the interbank market on Thursday. The drop comes a day after foreign exchange companies removed a cap on the exchange rate. According to the data of the State Bank of Pakistan, the Pakistani rupee slid by 9.61% from Wednesday's market closure. This marks the largest single-day decline in both absolute and percentage terms since the introduction of the new exchange rate system in 1999. Experts say the much-needed adjustment in the exchange was long overdue. Pakistan's foreign exchange reserves dwindled at a faster pace after the IMF refused to send its team for the 9th review of the $6 billion assistance package. The package was initially agreed upon in 2019 after allowing the market to determine the exchange rate. The government is hoping that the IMF would soon send its team for talks and ultimately release the last, or rather the next tranche of $1.2 billion. As the Pakistani rupee plunged to a record low, domestic gold prices hit an all-time high in the country. Gold was trading at 195,000 Pakistani rupees per 10 grams after gaining 4,900 Pakistani rupees on Thursday. But Pakistan's financial concerns do not end here, exacerbating problems for the South Asian nation. Its central bank, held forex, is now at its lowest level in more than 8 years. The State Bank of Pakistan held foreign reserves have now plunged to $3.7 billion as a nation of 220 million people struggles to meet its finances. The reserves can only provide an import cover of less than a month amid the precarious situation. More than 9,000 containers are stuck at Pakistan's ports, waiting to be paid for clearance. Many of these ships are carrying essential commodities, including petroleum products, LNG and soya bean. They are awaiting payments as the government looks for inflow of cash. But problems for Pakistan do not end here. The country is internally embattled on the political front as well, as the former Prime Minister Imran Khan is pushing hard for elections. The coalition leader Maryam Nawaz of the PMLN party was in London to meet former Prime Minister Nawaz Sharif. It is likely that the leaders discuss their way around the elections scheduled for October this year. Now, for more analysis about the situation in Pakistan, we are now joined by Amar Habib Khan from Karachi. He is a macroeconomist and a senior fellow at the South Asia Center of Atlantic Council. Welcome to the broadcast.
Thank you.
Right, my first question, this is a story we have been following very closely. The ongoing financial crisis in Pakistan, it seems to be worsening as we saw the currencies drop to a big low today. And it seems that all hopes are currently riding on the next tranche of money from the IMF. Is there a plan in place for the government if that tranche doesn't come in soon?
Well, yes, there was no plan earlier, but finally, after yesterday's events, we can say that there indeed is a plan. The market value of the rupee was within this range of 255 to 260 against the dollar for the last 1 month or so. But the government, or the finance minister in particular, refused to let the currency depreciate. Eventually, the currency depreciated, and this was one of the key preconditions or the prerequisite of the IMF, that the currency should float at its equilibrium level, or at the level where the demand and supply can meet each other. So now that has been done, I think the IMF program, we are close to closing the IMF program.
Right. If this IMF program does come in, the money does come in, how will it actually be disbursed on ground to tackle the economic crisis? Let's talk about the Pakistani citizen. They're scrambling for essentials.
That is correct. So when the IMF flows come in, other multilateral flows from the ADB, from IDB, and from other countries such as Saudi Arabia and UAE also start flowing in. Once they start flowing in, we can finally start importing key essentials, that is fuel, wheat, edible oil, and all other food-related items. And slowly and steadily, overall supply situation improves. What's happening right now is because of the obsession to fix an exchange rate, we were not able to import even the most basic staples. That led to a shortage locally and eventually higher prices. So once over the next, I would say, few weeks, the supply situation sorts itself out, there will be availability of goods in the market. But they will be at a higher price, because as fuel prices and everything else readjust itself, we will see another inflationary shock which would last for 6 to 9 months.
Right. Just moving beyond the inflationary shock and other things that you mentioned, there are essential commodities that are still stuck at Pakistan ports because Pakistan desperately needs money to pay for these essentials. Let's also talk about the political uncertainty that is feeding into the instability that the country is witnessing as of now.
That is correct. It is because of political instability that we have economic instability, or it just works both ways. The current government did not want to take any decisions that would lead to more inflation, such that they can have a better chance at the elections. But right now, what has happened, because they had delayed key decisions so much, inflation would really be peaking at the time when elections are going to happen. So that's not really a good narrative that would work in their favor. So politically, this could have been done much earlier, maybe even 6 months back, maybe around June. But doing this right now essentially means the inflation would be peaking at whenever the next elections will happen, and the opposition will have a much better chance at regaining seats than the current guys.
Absolutely. Thank you so much for all your inputs, and thanks for joining us on WION World is One at this hour. WION World is One is now available in your country. Download the app now and get all the news updates on the move.